Welcome to Equity and Ag, your daily recap of the stock market and agricultural futures. Let's break down what moved the markets today. Let's start in the grain markets, where corn managed to grind higher and finish the week on a steady note. March corn futures added 1/2 cent, closing at $4.3175. May futures gained 1/4 cent to settle at $4.42. Corn was able to string together two positive sessions in a relatively quiet week of trade. The main driver on Friday appeared to be renewed chatter about potential quality issues surrounding China's corn supply. That helped corn push higher, even as soybeans and wheat moved lower on the day. From a technical perspective, corn continues to show signs of a developing short-term uptrend. Support held firmly midweek near $4.27. If momentum continues, the next upside target sits near the 50-day moving average around $4.3575. Beyond that, traders will be watching trend channel resistance and the 100-day moving average just under $4.40. Soybeans pulled back to close out the week. March soybean futures dropped 4 1/4 cents to finish at $11.33. May futures were down 3 3/4 cents, settling at $11.48 1/2. The weakness appeared to be mostly profit-taking ahead of a long weekend, as traders reduced exposure and locked in recent gains. However, the market showed resilience. By the close, March beans had bounced roughly 11 cents off the session lows. That rebound suggests underlying bullish sentiment remains in place, especially as traders look ahead to President Trump's anticipated visit to China in April. From a technical standpoint, the next major upside objective remains the November highs, which sit between $11.45 and $11.65 on the March contract. Wheat futures ended the week under pressure. March Kansas City wheat fell 11 1/2 cents to close at $5.42 1/2. Chicago and Minneapolis contracts were lower as well. Some of Friday's weakness appeared to be technical in nature. After Thursday's strong rally pushed prices above key chart resistance, traders may have viewed the move as slightly overextended, especially considering the large global wheat supplies still hanging over the market. Profit-taking ahead of the long weekend was not unexpected. Even with the pullback, the broader short to medium-term technical outlook remains constructive. Trendline support, now just above $5.30 on the March Kansas City contract, has held multiple times since the rally began in mid-December. In livestock, today's slaughter totaled approximately 86,000 head. That is about 1,000 head above last week's pace, but roughly 16,000 below the same week 1 year ago. Saturday's estimated kill is around 1,000 head, which brings the weekly total near 541,000 head. That is roughly 5,000 more than last week, but about 21,000 fewer than this time last year. Live cattle futures finished mostly slightly lower, ranging from down 2 to up 57, with only the February live contract closing higher on the day. Feeder cattle were mixed, posting gains of up to 82, while some contracts slipped as much as 47. Beef cutout values are expected to finish mixed, with light to moderate box movement reported. Disclaimer: this report is for informational and educational purposes only and should not be considered financial or investment advice. Trading stocks, futures, and commodities involves substantial risk, including the potential loss of principal. Always conduct your own research and consult with a licensed financial professional before making investment decisions.